Inflation doesn't seem to be going away. Every day when you turn on the news, there seems to be some sort of new geopolitical event that's scaring markets, scaring investors, and giving everyone reason to perhaps panic and sell out of markets. And on top of all of that, we're $30 trillion in debt, over $30 trillion in debt. So with all this being said, should you put your money in gold of all places? We'll break it all down today. You don't want to miss it. How you doing, guys? Thanks for tuning in. As always, be sure to hit that like and subscribe button if you like today's content. And of course, if you need help with your own financial plan, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. So the inspiration for doing today's episode is actually Costco of all places. And no, I'm not going to talk about Costco's men's clothing section today. If you missed that episode where I talked about men's clothing at Costco, basically I alluded to the fact that I wasn't a huge fan of the fashion taste there, which led me to receive a ton of hate mail from the fellas out there. So I say a ton of bold stuff, on our podcast and YouTube channel, but apparently me, saying I wasn't a fan of the fashion taste associated with men's clothing at Costco, that's where, people drew the line, including my own father-in-law, who I know listens to this all the time. So for all the fellas out there wearing, Quicksilver and Kirkland shirts, today as they listen to this or watch this wherever they are, I can assure you, we're not going to be, sending any slander towards the clothing section at Costco. Can't promise that for future episodes, but you're not going to hear that today. But the reason why Costco has anything to do with this at all and how it ties into gold is that Costco recently started selling gold bars online. And people are busting down the doors to buy them. Apparently, when they post them for sale, they sell out really, really quick. And it's something that you can only do online. Supposedly, by some analyst estimates, they're selling over $200 million worth of gold every single month. And so people clearly have gold fever. And so it begs the question, why buy gold in the first place? How does it fit into your portfolio, and should you have it? So before we answer why someone would be interested in buying gold in the first place, I think it's important to understand some of the historical context around gold. So first and foremost, you don't have to be a rocket scientist to know that gold has been for thousands of years in many societies a form of currency, right? You look back all the way to the Roman Empire and Egyptian Empire and see that gold was utilized as a currency with some of these civilizations. And going back to the 19th century, gold has backed the currency of many of the major currencies in the world. So this means that a currency, let's say like the US dollar, if it became unstable or lost value, that it was gold that was backing it. And this is what is known as the gold standard. However, as we entered into the 20th century, most major economies in the world started leaving the gold standard, including the United States. So if most major economies aren't using the gold standard, why are people excited about buying gold? We don't have the gold standard, and gold itself is not utilized as a currency most places anymore. Well, as I mentioned earlier, there's a historical piece to it, right? Ancient civilizations utilizing it, but there's also the fact that gold in and of itself is limited, right? A country can, quote, print money, but gold in and of itself is limited, and there's only a fixed supply of it. So if you just heard all this and you're thinking to yourself, well, in a modern world, gold really doesn't seem like that great of a medium of currency. Maybe it's not the hottest investment in the world. You might be onto something. The reality is that gold nowadays is often sold to investors as a fear-based investment. I mean, to see this, I mean, just turn on any major TV channel on a Sunday morning and you're going to see infomercials, commercials of folks pushing gold on retirees, telling them that, hey, you should buy gold coins with your retirement money to protect yourself because the US dollar is going to cease to exist any day now. And when that happens, you better have gold at home to protect yourself. Not only will you have gold to, protect yourself in this doomsday scenario, but the value of the gold itself that you own will be very, very valuable because it will be so in demand. And from my experience working with retail clients of wealth management, that's very often the mentality people have, right? It's very fearful. They're scared of the doomsday scenario happening. Oftentimes they're more hyped up on, conspiracy theories and things like that. But those are generally the folks that are more inclined to want to dump their entire portfolio or a significant portion of their portfolio into something like gold. Now, let's actually dive into some data. If you're watching this on YouTube or on Spotify video, I'm going to put up a visual for you guys. And for the folks on a job, cooking dinner, whatever you're doing, I'll do my best to explain this data. So what you're seeing here is the performance of a $10,000 investment in gold, the US stock market, and the US bond market from December 31st, 1986, all the way to March 31st, 2024. What you will see is that $10,000 investment turned into $434,000 if you invested in stocks, $63,000 if you invested in bonds, and $53,000 if you invested in gold. So you can see in a modern world over the past few decades, the performance of gold has not been that great. And on top of that, there's a lot of volatility associated with gold, right? It's not like something like bonds. Bonds, I mean, just looking at that visual, bonds historically, it's been a much more steady ride from a volatility perspective. Gold, on the other hand, almost has a similar volatility profile to stocks, and yet the returns haven't been nearly as lucrative. So for all these reasons, I'm generally not a fan of adding gold by itself to a portfolio, whether that's gold, gold bricks, gold ETFs, gold mutual funds, or however you want to do it. That is why I'm generally not a huge fan of doing it. Now, if you watched all this and you're thinking to yourself, well, I disagree, I'm still going to go ahead and buy gold, then I would at least consider the following. Number one, gold fits into the commodities asset class family from a portfolio management perspective. So commodities, right? So think of it, stocks are an asset class, bonds are an asset class, commodities are an asset class. And what's in commodities are things like gold, silver, corn, wheat, coffee beans, hog futures, right? I mean, all that stuff is going to be in the commodities asset class. And if you are a believer in incorporating alternative asset classes other than publicly traded stocks and bonds into your portfolio for diversification, I don't think it's an egregious idea to want to sleeve in some commodities. I'm not necessarily suggesting that you do it, but I don't think it's unreasonable that someone did it. So for example, putting 2-3% of your overall portfolio into commodities maybe is not a terrible idea. And again, if you are going to do this, I would encourage you to do it through a broadly diversified commodity fund like an ETF or a mutual fund, instead of buying just gold by itself or gold ETF. And the reason for this is, as I mentioned before, commodities are highly broad, right? Gold is just one piece of a very complex puzzle to the commodity family. Now, commodities in and of themselves, generally speaking, they tend to do better in higher inflationary environments. And then in maybe tough economic times, they can at times be viewed as a safe haven in some cases, which again is a big reason why people like the concept of buying gold. But I believe that if that's why you want to have gold, maybe commodities helps you accomplish that. And to build on all of this, just buying gold by itself as a sleeve is highly speculative. You're gambling, right? So, for instance, it's entirely conceivable, right, that all the stars align, right? You get the higher inflation, you get the doomsday scenario, right? You get all these stars that aligned for gold to supposedly take off. Prime example of that, January 1st, 2020 to December 31st, 2022, right? You had COVID, you had a recession, you have high inflation, you have all these stars that are aligning that would suggest that gold is going to go to the moon, right? But the problem is that it didn't. Gold ended up underperforming stocks during that time, and it underperformed commodities, right? So the commodities family, right? The commodities asset class, let's say you bought a broadly diversified commodities ETF of some kind, you would have done better than the investor that invested in gold. And the numbers to support that are a $10,000 investment from January 1st, 2020 to December 31st, 2022. If you invested just in gold, you would have ended up with $11,900. And if you invested in broadly diversified commodities, you would have ended up with just $13,100. So again, you end up with more by investing in commodities in this example. And the point I'm trying to make here is, again, the stars aligned, right? Gold should have gone to the moon, but it didn't. And so it's not to say that that can't happen in the future. It certainly could, right? Gold could have its year and crush and dominate, and we could be in a gold bull market. But the stars need to align, and even when they do, it didn't take off. So bottom line, if you're nervous about markets and you believe that adding gold to your portfolio will create more safety and stability, data suggests that this actually might not be the case. If you're looking for safety and stability, this is where having a legitimate financial plan that guides your overall portfolio allocation is so important. It's much easier to know how much risk you should take on and the type of asset classes that should be in your portfolio in the first place when you have a comprehensive financial plan. If you need help creating a financial plan, feel free to reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. I hope you guys found this helpful, and I will see you next time.